Welcome back to Alpha Recap. Markets were closed for the day, and we're breaking down the action from today's session and the headlines that moved it. As always, if you have questions, you can reach us at stockalpha.ai.
Hey, glad to be here. Big day, a broad market rally with some noisy flows underneath. Lot to unpack.
Totally. Let's start with the headline number everyone noticed. The S&P 500 ETF jumped about 2.9%, finishing around $650.36, and volume was heavy, roughly 145 million shares. That set the tone for the session.
Yeah, that was a strong risk-on session. When you see that kind of percent gain on heavy volume, it's not just a few names carrying it. Analysts noted it suggested broad participation and some rebalancing activity.
Right, and the flip side was interesting. The inverse S&P ETF, the short S&P product, fell about 2.8% on massive trading, roughly 177 million shares. So we had big flows in both directions.
Heavy trading in inverse and leveraged products alongside a rally in long beta often points to either short covering or portfolio managers reshuffling. Liquidity was there, which is a double-edged sword. Right.
A couple quick reactions. When you see long ETF up nearly 3% and the short ETF down nearly 3%, it screams positioning change. Analysts said to watch whether breadth, advancers versus decliners, would back up the move tomorrow.
Exactly. Is this a regime shift or an overshoot that invites mean reversion? High intraday volume implies easy execution, but it amplifies speed and volatility on the next swings. So tomorrow's breadth will be telling.
Let's pivot to corporate capital flows. There was a notable deal that tied together AI and energy in an unusual way.
Cango closed a strategic investment for $65 million and took on an additional $10 million in convertible notes. The plan is to push into an integrated energy and AI compute platform that even mentioned Bitcoin mining exposure.
That's a lot happening in one corporate move. On the one hand, the investment improves liquidity and signals a strategic compute toward AI compute and energy infrastructure. On the other hand, convertibles bring potential dilution if they convert into shares later.
Yeah, and the analysts we read flagged that the convertible note terms will be key. Conversion prices, caps, timelines. Those details will determine how material future dilution could be.
Hold on, say that again?
Look for SEC filings. They'll show the conversion mechanics. If conversion prices are low, that could dilute existing shareholders meaningfully when, or if, they convert.
Makes sense. Also interesting that this linkage between AI compute and energy keeps popping up. We had another example on the talent side.
Synpulse brought back Patrick Becker as Chief Operating Officer, framing it as a push to become an AI-native consulting firm with an agentic operating model. That's private market evidence of the same theme we're seeing in public companies.
So private and public markets are both redirecting capital and leadership toward AI compute and automation. That pattern matters because it can create cross-sector pressure. Professional services, energy, and tech all competing for different parts of the same stack.
And it helps explain why institutional capital is rotating into AI-related infrastructure plays, not just software names.
Switching gears, governance and analyst moves had a few watchable items. Coca Cola Europacific Partners filed a voting rights disclosure, but it was light on details. No counts, no percentages.
That's the classic tease. Voting rights updates can precede proxy fights or board changes, but without the numbers, it's just something to monitor. We need follow-up filings to know if anything material changed.
And then there was an analyst shop, D.A. Davidson, trimming its price target on Hershey. The note didn't include the new target or the old one in the brief, so again, you get headline noise without the math.
Analyst target cuts can influence short-term sentiment in staples, widening trading ranges. But until the research is published, that item sits in the watch bucket too.
Now for a sector watch. ExxonMobil showed intraday weakness during the session. The initial reports didn't give a percent move, but because energy can be commodity-driven, a single-name dip can signal sector-specific drivers rather than a market-wide trend.
Right. Oil prices and supply cues are still the main levers for energy names. A pullback in Exxon could be profit-taking, a reaction to commodity moves, or company-specific news. Traders should cross-check crude and any company comments.
Let's talk attention metrics. They're becoming more relevant as an early warning system for volatility. Google Trends showed a spike for searches on Oracle layoffs 2026, about 50,000 searches, a roughly 200% increase.
That kind of search momentum amplifies attention, and can translate into trading flows even before a company confirms anything. Until Oracle provides an official statement or a filing appears, treat it as sentiment-driven noise that can nonetheless move prices.
Yep, attention-driven volatility matters, especially when retail gets involved. Okay, quick reactions only.
Wow,
Right.
got it.
Back to specifics. Biotech and sustainability highlights. Polarix Therapeutics presented at the Needham Conference, which, for clinical stage biotech, is a common catalyst. Conference presentations tend to bring slides, Q&A, and possible trading volume.
Absolutely. For a clinical stage name, conference color, or any hint on timelines can be a big swing factor. If Polarix releases slides or updates, that could move the stock.
Edible Garden made the FoodTech 500 list again. That's their 4th consecutive year. It's recognition, not revenue, but repeated honors help with brand momentum and targeted sustainability capital.
Recognition can open doors to partnerships and pilot programs, which matter for commercial rollout. But until we see partnerships or revenue milestones, it's more of a watch item.
Let's summarize the emerging patterns we saw today. First, AI is not just a software theme anymore. It's driving capital into energy, compute, and services. Think Cango and Synpulse moves.
Second, attention-driven volatility is elevated. The search spike for Oracle and heavy ETF volume underline that headlines and search momentum can create quick flows.
Third, capital structures are in focus. Convertible notes and voting rights filings bring dilution and governance risks to the fore, so risk managers are watching those closely.
And fourth, event-driven windows matter. Conferences and research notes, like the Needham presentation and the D.A. Davidson note on Hershey, are likely catalysts for idiosyncratic moves.
A few tactical things to watch tomorrow. Breadth and sector leadership after today's rally. Does the advance broaden beyond megacaps? That's the key question.
Follow-up filings from Cango and Coca Cola Europacific Partners. Convertible terms and voting rights detail. Those filings will move the needle on how material those stories are.
Also watch for any official comment from Oracle to confirm or refute the layoffs narrative, and the Polarix slides or transcript from the Needham presentation.
And keep an eye on open interest and flows in inverse and leveraged ETFs. Heavy volume there gave us a clue about positioning shifts today.
Quick hits to log, informational only. S&P 500 ETF up about 2.9% on heavy volume. The short S&P ETF down about 2.8% on very heavy volume. Cango closed $65 million of strategic investment and $10 million of convertibles. Exxon saw intraday weakness. Polarix presented at Needham. Oracle search trends spiked. Coca Cola Europacific Partners filed for voting rights disclosures.
Yeah, those were the headlines. Analysts note that today's tape combined a broad market surge with concentrated high-volume moves in ETFs and select names. The story felt like capital reallocation into AI-linked compute and long equity beta, with attention-driven indicators amplifying risk.
Bottom line takeaways? 1. Read the filings. Convertibles and voting rights filings are going to tell you whether these headlines matter materially. 2. Watch breadth tomorrow to see if the rally has legs. 3. Attention metrics can move stocks before fundamentals confirm anything, so keep an eye on search trends and follow-up company comments.
And 4, for portfolio managers, liquidity was available today, which helps execution, but it also makes any reversal faster. Positioning indicators in ETFs and derivatives will be important in the next sessions.
Okay, final quick Q&A reminder. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after tomorrow's session to recap whether breadth confirmed today's move and to dig into any filings or slides that dropped. See you then.